Welcome to my channel Let's Trade Smart, where we analyze and discuss trading charts in a simple and practical way. You might have watched my last video about Bitcoin, where I shared my detailed long-term view. That video gave confidence to many people, especially those who bought Bitcoin at very high prices and were feeling worried about the market. If you haven't watched that video yet, I highly recommend you go to my channel and check it out. Make sure to look at the levels I discussed there, because they are very important for understanding the bigger picture. So with that said, let's now move toward our gold weekly analysis and see what the charts are telling us. If you watched my last video, you might remember that I mentioned one very important level for gold. I said that the weekly closing should come above 4,602 if we want to expect the next bullish move. That level was very important because it would show that buyers are still strong in the market. If you haven't seen that video yet, it is available on my channel Let's Trade Smart. You can watch it there because I explained the whole idea in detail. Now one thing we need to understand is that the week which just closed was actually a short trading week. Because of Good Friday, the gold market was closed on Friday. So the weekly candle did not get the full time to complete, and that is why judging the weekly closing perfectly becomes a little difficult. But even with that short week, gold still managed to close above the 4,602 level. So technically the condition we discussed in the previous video is still respected. That is a positive sign for the market. However, there is one small problem. The weekly candle is showing rejection. If this candle had closed with a strong full body, it would have been a much stronger confirmation for the bulls. That would have made the situation very clear and exciting for buyers, but right now the candle is telling us that sellers are still active in this area. They are not letting the price move up easily. If we look at the bigger picture, gold is still in an overall uptrend on the weekly chart. For many months the market has been making higher highs and higher lows. Because of that, the recent drop looks more like a normal pullback instead of a full trend change. Right now gold is reacting around an important support area near the middle of the move. This is a place where strong buyers often step into the market. If buyers are able to hold the price above this area, then gold may stay here for some time and move sideways before the next move starts. Now if the market starts moving up again, we should look at the strong impulsive move that recently pushed gold down. When we measure that move, the OT zone of that impulse comes around 4,900 to 5,140, so if the bullish momentum comes back, it is very possible that gold moves back toward that area. In simple words, price can travel toward the 4,900 to 5,140 zone before the market decides its next big move. But we also need to keep the other possibility in mind. If gold starts breaking below the 4,500 area, then the market could move down toward the 4,200 to 4,100 region before finding stronger support, so right now the market is at a very important point. The level we discussed in the previous video is still holding, but the rejection in the candle shows that the fight between buyers and sellers is still going on. The next 1 or 2 weekly candles will give us a much clearer direction. Now if we move to the daily chart of gold, we can clearly see that last week was quite bullish. Gold pushed strongly to the upside and the daily closing also came above the 4,602 level, which is a positive sign for buyers. Another good thing that happened on the daily chart is the formation of a bullish FVG, which you can see in the yellow box. What makes it more interesting is that the very next day gold came back, filled that bullish FVG, and still managed to close higher. This usually shows that buyers are still active in the market. Because of this, we can expect that gold may continue moving up from here. But the real question is, how far can it go, as we already discussed in the weekly analysis? The price can move toward the OT zone of the downward impulsive move. And when we look at the daily chart, we can see that the same area also contains a bearish FVG, which is the purple zone on the chart, so this area becomes very important for the market. Now there are mainly 2 possibilities. Either gold reaches that bearish FVG and respects it, which could push the price back down. Or the market moves up with strong momentum, breaks through that bearish FVG, and even turns it into an inversion FVG. But which one will actually happen, we can only confirm when the price reaches that area and shows its reaction. Until then, this zone remains the key level to watch. Now let's move to the 4-hour chart, which is one of the most important charts for traders. If you watch my videos regularly, you will notice that I often talk about the importance of the 4-hour time frame. The reason is simple. Traders usually don't worry too much about where price will go in the long term. What most traders really want to know is what price might do in the next day or the next few sessions, so they can decide their bias and plan their trades. Anyway, coming back to our analysis. On the 4-hour chart of gold, you can clearly see that price is currently forming higher highs and higher lows. This already shows that, at least in the short term, the market is trying to move upward. But that's just what we can see with the naked eye. If we analyze it a little deeper, you will notice the area where I marked the red line. After a strong downward move, a bullish XAUUSD was confirmed there. After that confirmation, price respected the same order block and started showing bullish movement. Another important thing is that gold is still holding above the weekly level of 4,602, which we discussed earlier. And if you look on the left side of the chart, there was a bearish order flow. Gold grabbed the liquidity from that area and created a bearish FVG. Now the key thing to watch is how price reacts to that bearish FVG when the market opens on Monday. Because at this level a bearish XAUUSD is also visible, which means sellers are still present there. However, the important levels are still intact for now. So there are two possible scenarios. If on Monday gold moves up with strong momentum and cleanly breaks above that bearish FVG, then we can expect price to continue moving toward the OT zone that we discussed earlier. But if gold gets rejected from that bearish FVG and starts moving down again, then the next possible downside targets could be around the 4,400 to 4,300 area. So that's our complete analysis for gold. I hope this breakdown helped you understand the market structure a little better. And if you found this analysis helpful, don't forget to like, share, and subscribe to the channel. Stay connected with Let's Trade Smart, because when we learn together, trading becomes much easier and much more profitable. I'll see you in the next video.